Back with the market right here in ET now. Still struggling really when it comes to the entire, pack of markets, especially more so for the broader markets. Bharat Forge, by the way, has now slumped almost about 8% on the futures. There's Infi Beam, yesterday's big winner, that's down 5.25%. PFC is down 4.25%. Jindal Steel is down 4.25%, and the Shrey Infra as well, which is currently down 4% as we speak. Just look at the market breadth. It's almost 180 stocks within the F&O markets standing to the red line, which is just 23 odd standing to the upside. But let's shift focus. Lots happening with the aviation market. The fact that ATF prices have seen such a big cool off. The fact that Interglobe has appointed a person to strategize the next 5 years for them. And yeah, Jet, which also says that they're going to be looking at some sort of big investor in the next 2 to 3 months. So lots really building on with the sector. So let's bring on board Mayur Malik, research analyst with Indianivesh Securities, joins us on the show. And we also have Mr. Jitender, Bhargava, former ED at Air India, joining us on the show right now. Gentlemen, morning. Mayur, if I could come to you first, really. What is, or rather, how much has the industry growth and bottom line estimate been falling behind street estimates so far this fiscal? Because, really oil prices from extreme highs have now seen a cool off, but you don't know whether this is a trend in place or not just yet.
Yeah, I think as far as demand goes, demand I don't think has really surprised negatively. It has pretty much been in line with expectations. I think, yeah, cost-wise, of course, crude has played the major spoiler. So apart from the fact that, the yields are suppressed, the fact that they've not been able to pass on the hike, but I think this cool-off is definitely going to help them in terms of attaining numbers on the EPS side.
Right. And so, how do you measure the impact just as yet? Because it's a bit hazy. How are you looking at, all the fundamentals changing around to impact the bottom line of Jet Airways through this transition?
Right. So, if you really see, with every $1 change in crude price, it impacts the margins by about 60 bips, and about 1 rupee change in the rupee dollar impacts margins by about 50 bips. So, we've seen crude really coming down from 85 to sub 60 levels, and we've seen rupee also have a smart appreciation from about 74 to 70. So both these factors come in a very big positive for the aviation companies to impact their bottom line in a big way. So at this point, even if you assume that they are not really able to take a hike on yields, I should still say that what they've delivered in the first half, the second half will look much more promising than what they've achieved in the first half.
Right. Mr. Bhargava, wanted to get you also in on the discussion, and I want to get a little specific company-wise over here, because if you do look at Interglobe, for instance, after reporting their first ever quarterly loss in September, has now appointed Rananjoy Datta to chalk out a 5-year business plan for them. He's been the past president of Air Sahara and an advisor for restructuring US Airways and Air Canada as well. How do you assess this appointment? How material could it be for Interglobe?
You see, we got to look at Interglobe's this appointment of consultant from a larger perspective. Indigo will be inducting a huge capacity in the coming years. They are the market leaders. They also realize the difficult conditions that Indian market operates in, with very low yields, most airlines selling seats below the cost of producing a seat and thereby losing money. So the future is uphill, there is no denying, but Indigo does have distinct advantages over other airlines by sheer virtue of the market share that they command. With the induction of an experienced hand, I'm sure they're going to devise a business plan, because it is not just the business plan that's going to be looking at the Indigo's perspective, but as we have recently seen, that the fares are not going up the way they should have gone, and because it's a very clear intent on the part of Indigo that let other airlines bleed. And if the competition can get reduced, the capacity can get reduced, their capacity induction would become all the more smoother. with that kind of a business philosophy that they have been exhibiting, I'm sure this appointment will do a lot of good. And it again underlines the fact that we lack expertise in the country. There are very few people available to assist the airlines, and therefore they're banking on people who have been working for foreign airlines or who've had airline experience, very limited thing. But it's overall a very welcome decision on the part of Indigo to have inducted. They are fully realizing the kind of market environment they're operating, what kind of uphill task that they will face. And you see, as Mayur very rightly said, it was a temporary phenomenon for Indigo because of the high fuel prices that we witnessed, that they suffered their first quarterly loss. I'm sure in the coming months they are going to get back into profit, and oil has already dropped 11% this month, and which is a good change from the aviation industry.
Sure. Mr. Bhargav, give us your overview on this entire saga. It's been a very painful phase for Jet Airways. That's the least to say that, the troubles are far from over. But do you think that they will come on the right side of this trade or this, sort of imbroglio that they're struggling with?
It's a very difficult situation for all full-service carriers, Air India, Jet Airways, Vistara. Now, you cannot be competing with low-cost airlines and yet seeing that the fare differential between a low-cost carrier, Indigo, SpiceJet, Go Air, is very minimal as compared to full service where you don't cover the cost. Now, Jet Airways has taken some corrective action. For example, denying free service meals to certain section of passengers who've been buying cheap tickets. So you are somewhere in between a full service carrier and a low-cost carrier. But that also will not be enough. Now, this fund infusion that they've been speaking about is again a good thing. It acts as a breather to them. They will be able to tide over the problems that they've been facing. But the ultimate question is, how long? Now, the problem will persist as long as the fundamental dynamics of Indian market does not change, that all airlines realize that it's suicidal to be charging fares which are unsustainable. Now, unless that can change, I don't think there's a future. You're only differing the kind of problem that you are facing. For example, they will be able to pay the vendors, they'll be able to pay the pilots with the kind of infusion that they're going to get. It's still not in public domain as to who is funding it. Are they selling equity? And if yes, to what extent? Now, all these things will have to come in the public domain before one can take a very logical decision that is this reprieve temporary or is this going to be a sustainable fund for Jet Airways?
Mayur, want to come to you on on Interglobe actually firstly. What according to you would be the key monitorables that Rananjoy Datta would work on and something that the market would actually keenly watch out for from his 5-year plan? And how exactly is it placed given the kind of capacity addition plans that Indigo has and the current trend in yields that they're sitting at?
So start one thing at a time. We first start with capacities. So we know one thing for sure, that they are going to add capacity which is much ahead of demand. So yes, I think in the near term the pricing pressure will continue. I think what will be important for him is the fact that now Indigo has also decided to venture into the regional connectivity, where we've seen SpiceJet make a very decent RASK, and hopefully I'd want to believe that demand in these tier 1, tier 2 cities is pretty strong for them also to come and make a much higher RASK than what they are usually making on the metro route. So as a strategy, I would actually look at them that while they are really impacting competition on the metro routes, they would probably compensate their own earnings by really focusing more on the regional connectivity and probably making up for some of that competitive pressure on pricing on metro through the regional routes. Having said that, we'd also like to see Indigo that historically they've gained enough market share, and I'm sure their strategy really should not really be to go after market share in a big way. They would probably be, I'm sure, as a strategy, as an investor, I'd probably be more interested in looking at them making a much higher profit per seat rather than just getting more seats and not making any money out of it.
Right. My only follow-up question before we wrap up, and Mr. Bhargava, this is coming your way. I know the carriers are going through a tough time, and you've highlighted that. What would be the light at the end of the tunnel for the sector per se, and more specifically for Jet?
You know, airlines have traditionally believed that the government must give concessions for them to be in a better financial state. The reality is they have not been introspecting to say that are they on the right path? Is the business model that they're pursuing going to be helpful to them financially? You can't be chasing market share at the expense of profitability. Now that is a fundamental change that they got to bring about. Jet Airways will have to take a call whether it wishes to be a full-service carrier or a low-cost carrier. You can't be in between the two, because the passenger buys a ticket and he suddenly realizes that he's bought a ticket out of a certain bucket of fares which will not entitle him to a meal on board. Now, you can't be creating confusion in the mind, though they have come out with a long explanation that who will be entitled, who will not be entitled, like denial of lounge facility at the airport because they can't afford it, meals coming in. So it leaves a bad impression as far as their loyal customer base is concerned. Now, Jet Airways will have to take a call as early as possible as to what they wish to remain, because the business model, they can be clear within the airline that what business model they will pursue. But unless they can share it with the public as to what is the business public and what kind of facilities, amenities they are going to be getting, I don't think people will be able to be, very confident in patronizing the airline like they've been in the past.
Fair point. Mr. Bhargava, such a pleasure having you on the show today. Thanks much for taking the time out. And Mayur, good to have you as always as well. We'll chat again soon on the prospects of aviation.